please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, it's time to discuss where the markets are headed from here. We are getting strong growth impulses from the global market as well as inflation impetus as well. How will the domestic markets negotiate all this? Our market master, Manish Sonthalia, Head Equities PMS at Motilal Oswal AMC joins us. Good morning, Manish. Good to have you with us. What's the overall comment? Has growth got its mojo back and now we should be able to go back to 11,000 this year, you think?
I think from here onward, it will be short covering which will drive the markets on the higher side. Obviously, the current quarter numbers will have a bearing on where the markets would be headed. But having said that, I think the initial set of numbers look pretty decent, but the latter set of numbers needs to be seen. From that point of view, I would be more bullish on the markets going forward, rather than believing that the markets will stagnate or take a correction from these levels. So I'm in the bullish camp.
Okay, you're in bullish camp. Manish, good morning. What sectors do you think would lead the next run? We have seen leadership change quite clearly and emphatically from banking to IT. You reckon that that could continue this year, or do you think banks would make a comeback?
So private sector banks have been doing reasonably well. I think that party is going to continue. I think export-related sectors, thanks to a depreciating rupee, would be in the limelight. And obviously, valuations for IT and pharma were very conducive. We're seeing digital-led orders come through thick and fast. So the deal flow pipeline on the digital front looks pretty decent. That will have a bearing on the top line of most IT companies. Obviously, it has to do with the valuations, which are trading at slightly expensive valuations and which are trading at reasonable valuations. From that point of view, it's a pick and choose in the IT space here on, but export-related sectors in general should be doing pretty well.
Will you start loading up on the private corporate lenders, not just the private retail lenders?
No, Lata, I would be happy, owning the retail lenders because we are getting decent growth on that front. There's a whole lot of ifs and buts as far as the corporate lenders are concerned, and we need to hear the commentary that comes out of Q4 numbers out of the corporate lenders to see whether things have bottomed out for them or still a work in progress for them.
Okay, by the way, the Bank Nifty is picking up more pace now, almost 0.5% higher on the Bank Nifty itself. And Yes Bank is leading the pack. It's up almost about 2% right now. Manish, hi, good morning. The sector that everyone seems to be taking a fancy to lately is this whole vehicle financing space, the commercial vehicle space. We were just speaking with Cholamandalam and where they said that, things are looking extremely robust for the next few quarters. You've had exposure in this sector, but would you still put some more money to work here?
Valuations is something which one needs to take a call on. I think on the CV front, the cycle is very strong. It will extend up till 2020-21 with a slight dip in the interim. But other than that, I think the cycle remains pretty strong. All CV financiers would be in the limelight. And, if the scrappage policy comes through, it will be an icing on the cake. So from that point of view, valuations can get re-rated from these levels. On that account, there's still some more upside, maybe a 10 to 15%, still more upside on the NBFCs which finance CVs. That is how I would reckon.
Okay, on the Bank Nifty, what's interesting is that the futures have turned into discount again because we've moved to that zone again from where for last 2-3 days there's been some resistance. So let's see if we are able to sustain those gains. As you can see, just a bit of nick over there. But Manish, so this whole year, last year was about domestic buying. Is that back full time? Because, we had made this point that perhaps March was not a good gauge. You should not look at March numbers. Is, April back to full time in terms of the kind of inflows that we used to see in domestic mutual funds?
No, so flows have definitely ebbed. Flows have substantially reduced from what we had seen in the month of Jan-Feb. It was slower in March, and I think April is continuing to be slow. I think there is a rethink by the retail investors on whether these valuations on the markets could sustain or not. I think what needs to come through for sustained inflows into Indian equity markets would be Firstly, the earnings growth revival, if that comes through, then obviously the confidence level goes up. And how the global situation plays out, the 10-year G-Sec in US and India, how the inflation rate differential, currencies, etc. play out. But what we have seen, again and again is that whenever rupee depreciates, the foreign investors tend to get jittery. It's no different this time around. So, rupee needs to stabilize if we need to see inflows from the foreign investors.
Okay. Manish, once again to come back to the finance space, you spoke about private banks. What else?
So, it's private sector banks, it's NBFCs, and I would, also reckon that, the microfinance space, 2019 could be a very good year for them. So from that point of view, even that space looks good. So it's only sticking to these names and, nothing to do with the PSU banks or, the corporate lenders. We would be staying away from them.
What about some of these FMCG/consumption companies? I mean, names like Pidilite have been hitting new highs. Names that you guys have in your funds, Britannia, etc., have been doing exceptionally well. Is there still a lot more to go on the upside here?
So in an inflationary environment, obviously consumer staples, real estates, these would be the themes which actually plays out well. Because it's not only about volume growth, it is also to do with value growth, and that percolates into margins and ultimately into net profits. And if profit growth is better than estimates, you could also see some PE rating. So from that point of view, the entire consumer staples space and those which having a emphasis on the rural space would tend to do well. So the names which you took are definitely on our radar, and we own some of them in our portfolios and would continue to like to hold them for some time.
Biocon is now up 2%. We're discussing about this stock in the morning as well. So just pull out that stock intraday, and there's a big move which is on right now. Manish, in the pharma space, is there anything that you like?
Everything is it's a fire sale in the pharma space, literally. But there's definitely more comfort in the domestic pharma names. Of course, you will be saved from the negative shocks of 483s and import letters and warning letters. So that story continues good. And of late, what we have seen at these names are favored as opposed to generic manufacturers. So price erosion has still not played out, let's say in the US. Once we get some visibility on price erosions in the US, then I think there'll be some emphatic buying that will take place in the generic pharma names. But there is value on the table, as far as the entire pharma space is concerned. I mean, one can pick and choose what they like, but there's value on the table, definitely.
Okay, so once again, to end where we began, what will be your macro call on the markets, considering that we now have a mix of Indian consumption growth as well as global growth kicking in simultaneously and kicking in well? Are we likely to see this hump of 10,600 and all conquered? And markets doing, surprising us on the upside despite uncertainties like elections?
I would believe so. I think, we will hit new highs in the current financial year. This would be on the back of earnings growth and not so difficult macro conditions. If GST collections, etc., come through, then I think fiscal deficit, and if oil prices hold where they are, then current account deficits can also be managed. Sure. So I have to keep my fingers crossed, and I'd be looking to positive outcome on the markets for the current financial year.
All right, Manish, on that optimistic note, we'll let you go. Thanks so much for joining us. In fact, you were talking about how this microfinance space is picking up. Bharat Financial Inclusion is the stock on our radar. The company reported a very strong quarter. It was the best ever quarter, in fact, for them. Ashish Damani, the CFO of the company, joins in now. Ashish, welcome to the show. Thanks for joining us. It's been a strong disbursement growth for you. Just start by telling us where the demand is coming from. Is it because rural economy is picking up, or is it, the post-demonetization gap that's getting filled up now?
Thanks and good morning, Sonia. Yes, for us, we've always stated that, the demand has not gone anywhere in rural India. It was subdued because of demonetization in the first couple of quarters. But if you see our numbers for, Q3 and Q4, our customer acquisition has really picked up. We have done 11.5 lakhs against 8.6 in the third quarter. And that's like roughly about 30% increase on a quarter-on-quarter basis. And this is something that you would see continuing for the coming financial year, and that's also baked into our guidance that we have given.
Okay. How do you expect your asset quality? I mean, do you expect a substantial improvement in asset quality?
If you look at our numbers, the disbursement that we have done from 1st of January 2017, the numbers are already at the normal, which is at 99.8% in terms of collection efficiency. And this is something that we would expect to just continue. And that also goes with the kind of growth that we have put out. We would like to grow in the geographies where we are present, and largely, and we will be slightly getting into some of the new geographies into just test waters. If you look at our net NPA is down to 0.1%, which is what we have normally.
Okay. Well, actually, Ashish, once again, to get back to the growth story, now that you have an IndusInd network as well to ride on, can you give us some more clarity on how you expect AUM growth and disbursement growth?
So AUM and disbursement growth is in line with what we have guided earlier. So we are looking at 45% growth in the coming year, roughly in the portfolio outstanding basis or AUM basis. And in terms of our disbursement, we are likely to grow at closer between 35 and 40%.
And margins?
So margins are guided by the RBI's margin cap, and we've been sticking to that. Last year, we had a very successful year where our cost of funds have dropped by almost 90 basis points on a weighted average basis. And presently, we are at that 10%, so likely to just continue at this.
Do you think you can increase rates? I mean, borrowing costs in the system are on the rise, and Bandhan Bank also lends, I think, at a rate higher than yours. So do you think you can increase rates in the future?
See, there is always operational flexibility is always there to increase the interest rate if need be. But presently we are at the margin level, so there is no need to immediately look at increasing rates.
Okay. You had also said you acquired about 11.5 lakh customers in this quarter, right? Just to get that figure.
That's right.
Okay.
That's
so what kind of a growth, a quarterly run rate do you think you can establish over the next few quarters in terms of customer acquisitions?
So this run rate is what we would like to maintain, and this will improve as we roll out more branches. We are looking at rolling out about 320 branches in this financial year, and that should definitely improve our run rate.
All right, we'll leave it at that. Ashish Damani, thank you very much for joining us. And I think that's a scorching guidance, 45%. And margins at the moment are at 10.8. It's RBI caps it. You can't lend at higher than that. And therefore, they are quite sure they're going to repeat this performance and only do better in terms of disbursement growth.
The only issue here is, of course, now it will move in line with IndusInd Bank because there's a set swap ratio that we have. So wherever IndusInd goes, Bharat Financial will literally follow that. So that's the way it is now. On that one. Ashwani Gujral and Mitesh Thakkar back with us. Rajat Bose also with us. Ashwani, been a good start, especially for the Bank Nifty, but once again a bit of a discount now. Your thoughts on index first and of course stock calls?
See, my sense is by end of the day, if IT can also recover, then today you could have another crack at 10,620 thereabouts. What's good is ICICI Bank is showing very strong action and possibly looking at a trend day, because yesterday it was down quite a bit and today it's gapped up and kept on going. So that way I think private banking looks very good for the day, particularly because it probably has lower long positions and some short covering also could play in. So that way Bank Nifty longs remain, and Yes Bank is a buy with a stop of 310, target of 327. ICICI Bank is a buy with a stop of 279, target of 292, and Chola Mandalam is a buy with a stop of 1680, target of 1760. The noteworthy thing today is that today we gapped up lower than yesterday. So every day we have this bad news and we gap down. The gap down seems to be at a higher level. So today's low is now becomes your stop. So I think the market is unlikely to go below 10,000. 570 thereabouts.
Okay. Ashwini, ICICI Bank actually for last 3 or 4 days has been quite weak, where the rallies have been sold. What gives you confidence that today is a bit of a trend day here?
See, because it opened up 2%, it's a large stock. It does not generally open up like that. And the other thing is that we retested kind of the previous low, about 260 thereabouts, with yesterday's decline, and we've reversed from a higher bottom. So that just means that the whatever selling was left is now probably done, and now you'll probably get a stronger upside.
Okay. Well, Mitesh, good morning to you again. What would you trade now?
Yeah, so I have Yes Bank on my list as well. Okay. Keep a stop at 314, look for targets close to about 335, and Biocon in the pharma pack, and the entire pharma pack is showing momentum. You can see Lupin, you can see Glenmark. I think Biocon is also doing that. That's a buy with a stop at 632 for targets of 675.
All right, everything to do with commercial vehicles is hitting new highs today actually. Ashok Leyland is at a new high, so it stopped at 160 mark. Not just that, Jamna Auto that provides parabolic springs to commercial vehicles, that stock is also at a new high today. That's almost at 100 rupee mark. And of course, CV Financiers, we've spoken about that. Shriram Transport, Cholamandalam, all at new highs. Rajat Bose is with us. Rajat, this entire gamut surrounding commercial vehicles are all doing very well. Any stocks there that you're looking at? And if not, what else?
The second stock that you mentioned, that looks pretty good because it's hitting new highs. 99 is Jamna Auto. Jamna Auto could move up to 103. There it might meet some resistance. If you want to buy, then put a stop loss below, say, 97.80 and trade this counter. But this could be a little volatile in today's session. And also, Cleveland, I would say wait for 163 to be crossed, and after that you can buy with a stop below 160, because in that case it can go up to, say, something like 167.5, 169 kind of range. Apart from this, the two calls that I have is, say, Infra April futures. Buy with the stop below 87 and target would be 93, and Dr. Reddy's April futures, buy with the stop below 2135 and target would be 2185 and 2205. Pharma is doing very well today.
Yes, absolutely. There seems to be a mojo coming back in pharma as well. Gentlemen, thank you very much for joining us and for giving us your 10 a.m. trades. We will, of course, keep coming back to you. There is another trend, that story over here in the bond markets. You know what bond yields are? They've actually fallen after all the global macros at 7.68. And this is a rumor that's been doing the rounds for some time now. Yeah. It's gotten more pronounced today that the central bank probably is buying bonds. You know, the PSU banks have been sitting out for some time now. The rumor going around is that RBI is buying. This you get to know only 1 week later when the purchase and sales are released. So for the week ago period, we know that RBI did not buy. But the rumor started again that this week they've probably bought. And you know, it's quite possible that the deposit insurance company buys in the beginning of the year. It's possible that state governments, some of their bonds got redeemed and therefore there is some buying done by them. But this rumor has been doing the rounds for some time now. That has also led to a relief both in bonds and in banks. And
I think that explains why PSU banks are beginning to reverse.
Yeah, I saw even SBI coming to green.
Highs of the day. SBI, Canara Bank, which is most vulnerable to move in the bond market. Just pull out the intraday chart of Canara Bank. That's the one which is now getting back to the highs of the morning. So I think, Lata, I take your point on that. PSU banks clearly beginning to rally because of that move that you're seeing in the bond market.
Yeah, so I mean, now several things are working for the banking sector. The rise in yields along with growth is very good for the private lenders. There is, if there is this kind, I mean, I don't know how long this rumor will last, but that rumor is helping the bond rally and the PSU banks as well. And of course, growth always is good for banks. But we have another company waiting for us.
Yes, in fact, we've been talking about how NBFCs have been doing quite well this quarter. LIC Housing Finance, though, bucked that trend. It posted a lackluster set of earnings in Q4. The loan growth actually came in at a 6-quarter low, but the net interest margin saw an improvement. Vinay Saha, the MD and CEO of LIC Housing Finance, joins us now. Mr. Saha, thanks so much for joining us. The disbursement growth has been quite high compared to the previous quarter. So if you can just start by that, tell us what led to this boost.
On the home loan disbursement growth side, we have been actually following up very hard with all our offices. We have got some contribution from the affordable segment also. So home loan segment has given a very good growth rate. Project, though it has the disbursements have happened in Q4, but the groundwork was being done now from Q3 itself. So these two factors combinedly, if I can add, the sectors or the areas which have done very well are the central part of India, western part of India, some portions of Karnataka.
Okay, sir, the yield on individual portfolios has been coming down. It is the lowest actually for you in what, 9 or 10 quarters. How do you see the cost of funds going ahead?
Two things I would like to add here. One is regarding cost of borrowings. If we see the full year performance, in fact we have brought it down by about 50 basis points. But as you said, the yield of course has also gone down, and there because the drop was about 100 basis points. So overall that has affected. Now with the bond yields going up, probably if they remain in the same range as they are right now, probably we would see not much of an effect. I may also tell you that we have revised our prime lending rate also. We have made it upwards by about 20 basis points with effect from this month.
Okay. Mr. Shah, good morning. So what's the guidance then for NIMs or net interest margins?
Q3, if you remember, during the meet, I had said that probably the 2.33 levels of NIMs that we experienced then were one of the lowest, and things should take a turn now. That has improved by about 16 basis point, and Q4 NIM was 2.47. Now going ahead, I see further constant improvement in this.
Okay, so we leave it at that. Thank you very much for joining us and giving us a sense of what's going behind the numbers in LIC Housing Finance. It was inline set of numbers, maybe a little under the weather, considering that several other finance companies, NBFCs, have done very well, including housing finance companies. Okay, but there is another company that we want to highlight, and that is Reliance Naval. There were, of course, the results which came in rather poorly, but that's been happening for several quarters now. But what is important this time is the auditor's qualification. The fourth quarter numbers reported yesterday showed that, and I think we should get that quote up for you. The company, this is point number 3, where the auditors have qualified, saying the company has been incurring cash losses. Its net worth has been substantially eroded as on 31st March 2018, and loans have been called back by secured lenders. Current liabilities are substantially higher than current assets. So the auditors clearly worried, and of course secured lenders taking the company to the NCLT. Mr. S.P. Tulsian of sptulsian.com joins in. Mr. Tulsian, thank you very much for this unscheduled visit. You have warned us of this company before. What do you make of this auditor's comment?
See, if I just take the 3 calls, the auditors, which in fact, as a you know, and the way the more compliance has come on the auditors also, they have all become very vigilant. And 3 things auditors have taken note of. One is as a going concern, second is recognition of deferred tax assets, and third is the the diminution in the value of the non-current assets. Go on the going concerns, obviously the net worth got eroded. There is a debt of about 11,000 crore, and all those points have been referred that, in respect to the defaults, winding up petition, loan having recalled. Second is the deferred tax assets to the extent of about 400 crore. I am referring, on the consolidated basis, if you read the note 5 of the consolidated accounts, where they have said that generally, this is an accounting term. I don't want to go into the detail. Deferred tax assets are always booked when, you have the hopes of making profits going forward for a loss-making company. So if you have a question on the going concerns continuation, the existence of the company continuing because of the huge losses, the deferred tax assets also, because that brings down the losses on the book basis. Just to give an example, the profit before tax, that is loss before tax of the company, is at 1200 crore, but loss after tax is 1000 crore. So that does not mean that government has given you 200 crore as tax credit. It is just a book entry of deferred tax assets which you will adjust when the company goes profits. So this is the second point. Third point is on the non-recognition or maybe of the diminution value in the non-current assets, because the company is having closure to fixed assets of 6,000 crore, work in progress of 5,000 crore, and they are rightly in saying that 11,000 crores of the assets, including work in progress, are supported by the loan of about 11,000 crore, because net worth virtually got eroded. So your entire fixed assets are seen having financed by the banker's loan. So there is a question whether the fixed assets of which is called non-current assets are having that kind of value, because fixed assets include work in progress also, as I said, of about 5,000 crores. So there is a question, because we have seen in the past that suddenly companies provide 1,000 crore, 1,500 crore, 500 crore by either writing off the current assets like inventory book debts, or providing the impairment in the value of the fixed assets. So the auditors are right in raising these 3 points, but one can say that these are the mechanical observations. Also, in every loss-making company, if you have these kind of losses, loan having recalled, they have to give this kind of note. They can't escape. But coming on the fundamentals, if you really take a call, the kind of losses which the company has been incurring, the top line is less than 400 crore, and the losses before interest is about 400 crore. So I don't think that you have any kind of hopes. On top of it, you are incurring an every yearly interest of about 750 crore. And in fact, in spite of the exposure of about 10-11,000 crore, the matter has not been referred, or having admitted into the NCLT or maybe whatever it is, because the banks have and all the lenders have initiated the process. So coming on the auditor's observations, they are right in giving on these 3 points which I have said, and naturally the financial health of the company seem to be quite bad, in spite of company having acquired about 3 years back by the from Nikhil Gandhi by the ADAG group.
Yeah, they also talk about the concerns with respect to the metro business, Mr. Tulsian, and the auditors do say that the ability to continue as a going concern is questioned because of all of the reasons that you alluded to, and also the way the metro business is functioning. What do you see as the next step now? Because this also raises questions not just about what's happening with the defense business, the government orders there, and of course the metro business as well. The latest we hear is that the NCLT had adjourned this case, but what do you see as the next step?
See, honestly, the situation is very precarious. I don't want to sound too negative and too pessimist, which in fact I have to, if I have to be an honest analyst. Because looking to the first, I don't think that metro businesses seem to be too relevant, because this is more of the companies, foraying and focusing on the defense and all that. And maybe the government also has to be very careful, because in spite of the very good infrastructure, I am referring erstwhile Pipavav Defense, when this company was acquired, Reliance, the name got changed from Reliance Defense to Reliance Naval and all those things. Merely infrastructure and few collaborations will not work. The financial health of the company has to be seen very important. The financial obligations how they have all been discharged seem to be very important. So I don't know whether the company will really be on the approved list of the defense, or maybe Ministry of Defense, or maybe the Army, Navy, and this one, So it's very difficult, because their main focus is more on the shipbuilding, warship, all those advanced kind of things. Metro is not a significant business for them, and in given that situation, first the immediate problem before the company is to resolve the loan of about 11,000 5,000 crore, there has been all defaults, because whatever even the auditors have referred to current assets to current liability mismatch, the current liability is more on account of the defaults to the extent of 5,000 crore to the banks. They are not the supplier's credit, or they are not the supplier's current liability. In fact, there are no supplier's liability, which establishes that no one is prepared to supply the material on credit to the company. So I don't know if you have to execute the defense order with so many diseases or so many elements into the company, can they really cater to? So in this given situation, unless until the hit of maybe 6, 7, 8,000 crore to the extent of 75% is taken by the lenders, or there is change of management. And in fact, if you really ask me, honestly, there has to be the change of management, then only the company can survive. Otherwise, I don't have any hopes, which in fact I've said when the company was taken over by AG Group at that time also, that probably that's not their forte. That's not their foray in which they are venturing in.
Actually, a lot of analysts like you have mentioned that it has good assets. So you think that there is an ultimately good resolution possible, that there can be a change of hands, if there is a change of hands in this company?
See, good infrastructure works when it is not an overcapitalized company. That's what I've said. They have the second largest shipbuilding yard in the world, that's what I've understood, when I'm referring my 3-4 years old details. But all this infrastructure works when the company is optimum capitalized. It is an overcapitalized company. I don't think that, that's what I've said, that out of 11,000 crore of fixed assets, if you have 5,000 crore of work in progress for a company which has been, erecting the infrastructure for the last 8 years, 9 years, 10 years, I don't know whether those things can really be taken as a valid assets. So if you have assets of about 5,000 to 6,000 crore, that has to have a debt of about 3,000 crore plus equity infusion by the new promoter of 2,000 crore. Then only the company can survive. So that's what I've said, that if a hit of 70-75% of the loan is written off of the 11,000 crore, then only the company will survive. And definitely, if I recall when the company was seen on the block, there were many acquirers, maybe like Mahindra & Mahindra, L&T, Hero Moto. And if the company like, or if the promoters like M&M or L&T comes, definitely they can turn around, because L&T is seen to be having a strong presence in shipbuilding. In fact, I remember 3 years back when there was race, even Hero Moto Group have sold some of the stocks and kept the amount ready with them. So definitely the company is having good infrastructure, but it has a value capped at about 4,000-5,000 crore and not at 11,000-12,000 crore.
Fair point, sir. Thank you very much, Mr. Tulsian, for giving us both the history and the current status of the company.